Kenyans, let me explain to you what happened yesterday. But before I do that, I want you to listen to me very carefully. And after you do, please share this video across all platforms that people can be able to watch it and gain value out of it. The truth of the matter is, whenever you see markets move, always know that financial markets move in three waves. The first person responsible for the wave in a financial market is usually the insiders, people who have information that the public doesn't have. In this case, the most important entities are the decision makers, Treasury, Central Bank of Kenya, IMF, employees to these institutions. They usually know something that we don't know. I want to take you through some specific steps of what happened in the recent past that could have already made you see exactly what is going to happen to the Kenya shillings. But before then, notice that the first wave of a financial market is normally caused by these people, the insiders. The second wave is normally caused by people called financial advisors and fund managers, those people you go to for advisory. And then the last people to notice is normally the media and the public. Now, how do these different people behave? The first people, the insiders, they normally take action just when the market is about to take a turn. What happens to the financial advisors, the second wave? They normally take action when the market is still on its way down or is still on its way up. So whenever your financial advisor or fund managers advises you, just know that that market is still on its way down or it's still on its way up. The public and the media normally take actions the last, and they normally take action when the market, they take the opposite action of what is happening to the market. So they are consistently usually very wrong. Now, having said that, let me give you the activities that happened in Kenya that you could have seen or you could have told that this is going to happen. On the 18th of January, IMF approves and disburses money to Kenya to the tune of $684 million. That is supposed to come and do various things, but above all, it was to improve, of course, our forex reserves. Now, something very interesting happened. Before the 18th of January, the Kenya shillings was still depreciating. And then immediately after IMF took that action, after the 18th, the Kenya shilling starts appreciating. That was the first point we could have noticed that something is happening. But the interesting thing is, by then, the investors had already started taking action. They had already started selling. So the selling started in January, around 18th, or even slightly before that. And then the Kenya shillings from the 18th started appreciating, albeit very slowly, but it was appreciating. Then something very interesting happened on the 6th of February. The Monetary Policy Committee had a meeting, and they decided to increase the central bank rate from 12.5 to 13. What effect does that have? The effect of that is going to stabilize the currency. So even before anything else, that step alone was going to have an effect of stabilizing the Kenya shilling. So the Kenya shillings was not to depreciate any further, just because of that one specific action. The following day after the MPC met, the Treasury announced that they have accepted a tender offer on the notes of the 2024 notes with regards to the Eurobond. So you see these events happening, IMF, Central Bank, Treasury. Now, immediately after the Treasury announced what they announced, the Kenya shilling started appreciating at a faster rate. It started appreciating at a faster rate, and as a matter of fact, on the 8th it was 160.1, on the 9th 160, on the 12th 159. By the time it was reaching 13th, it was at around 158. But majority of the second wave of the financial advisors and fund managers, of course, were noticing it by the around the 9th and the 12th. That was the Monday of this week when it was at around 159. And most of you, if you're honest, you must have received advisories from your financial advisors on the same about the Kenya shilling. The final wave came. You can see that it continued appreciating. And when the time came on the 14th of February, something interesting again happened. That is when the London Stock Exchange posted an important notice indicating that the government of Kenya through the Treasury is going to issue a new Eurobond that is supposed to help them pay the initial one that is falling due in June this year. It is that specific notice that the media picked up, and the media started announcing what is about to happen, and the public also picked it up. So you can see how that wave finally came to the public. So by the time the public were noticing, because the media now were communicating about the Eurobond, that is exactly when the public panicked. And everyone now started selling their dollars. While the public panicked, they pushed the Kenya shillings further. And that is why you saw it got to a level where it almost got to 139. But that 139 does not have any economic explanation. It is purely as a result of the public panic. The initial guys, the first wave of people who had already sold, now started buying. And that is the time now they're buying because they know that the market is about to turn again. That is why yesterday some people were saying, please hold on to your dollars, while everyone else was saying sell. The market was about to turn again. What am I trying to say, guys? It is just a public reaction, and as such, the Kenya shillings will stabilize back at around something in the region of the 150s. Anything else below that, I think it's just a public reaction, and it will go back to the intended region. My name is Duncan, and I have a YouTube channel that is called Channel Ask Dra. If you want to understand more and in detail what I've just explained, on TikTok I've tried to summarize. I have my YouTube channel where I am going to expound this point even further. You can follow me on my YouTube channel and you'll be able to see exactly what I'm trying to talk about.